forward. Well, you can sit in the front rows. Warm good morning to one and all. To start the proceeding with, may I request our Sicasa chairman, C.A. Naresh Chandragalli sir, to accompany our chief guest for the day, M. Naganathan sir, to the dais. Please give them applause. Now may I request Mudan to give a bouquet to our chief guest for the day, M. Naganathan sir. Now may I request our Sicasa Vice Chairman, Mr. Mohit, to accompany R. Shivkumar sir to the stage. Now may I request Lakshmi to present a bouquet to R. Shivkumar sir. It's time for our ICA motto song.
Yaesha supteshu jagrati Yaesha supteshu jagrati Kamam 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 kamurusho Purusho Nirmimanaha Nirmimanaha Tadeva Shukram Tad Brahma Tad Brahma Tadeva Mritamucchate Tasmin Lokaha Shataha Sarve taduna tyati kaschana Etat dvaita Etat dvaita Etat dvaita Etat dvaita Etat dvaita Etat dvaita.
Professional and guru for many chartered accountants. Faculty for today's seminar: CA S. Ramesh, in absentia CA R. Sundarajan, CA Uttam Chand Jain, CA Vittal Raj. My colleague in the Regional Council, past chairman of Sicasa and member of the Sicasa for the year 2012-13, CA Srinivas, CS, and my dear future chartered accountants. At the outset, let me welcome each one of you for today's Sicasa Bank Audit Seminar. This seminar is designed in making CA students who would be participating in the bank audits, which would be starting in about a week or 10 days' time, to prepare, participate, and perform effectively by understanding the nuances of bank audit seminar. In this line of professional activity is very interesting, exciting, and challenging, as the audit involves our extreme dedication in understanding, involving, and executing the work diligently, professionally, and perfectly. As a student, I was dreaming of being a chartered accountant, for which I struggled very hard, and I am sure each one of you are in some stage of this process. Dear students, it is said, the key to realizing a dream is to focus not on success but significance, and then even the small steps and little victories along with your path will take you to greater heights and meaning. And in this process of becoming a chartered accountant, there will be success and failures. And as rightly said by Sir Winston Churchill, success is the ability to go from one failure to another with no loss of enthusiasm. To make a CA student an all-rounder before they become a professional, Sicasa is keen on organizing various programs and events during this year. One of such events is this today's bank audit seminar for CA students. In today's seminar, we have 3 sessions where the students will be making presentations. First one being on LFAR and reporting on advances. The second topic would be on prudential reporting. Third one is on LFA reporting of non-advanced. And in the fourth session, we have the use of information technology in the bank audits and how it will be useful to make the chartered accountant, while giving a report, it's true and fair. Finally, friends, I would like to welcome each one of you for this seminar, and I request each one of you to give a big round of applause to the chief guest and also to Sri Shivkumar Garu. Big round of applause, please. So back to Lijil.
I request our chief guest for the day, Naganathan sir and Shivkumar sir, to inaugurate the session by lighting a lamp. I request Kota. Now I invite our special guest for the day, Shivkumar sir, to speak a words with us. I request our Sicasa Vice Chairman Mohit to introduce our chief guest for the day, and Naganathan sir.
Good morning, all of you present here. I take immense pleasure and pride to introduce our today's chief guest, Mr. Naganathan sir. He is a fellow member of this institute from 1970, and he is in practice since his enrollment from 1965. And coincidentally, our Sicasa chairman Naresh Chandra Gilli sir, he was also enrolled on the same day, 4th August, many years later. Mr. Naganathan sir is a partner in Price Pat & Co. and he joined it from his date of enrollment and is still continuing there. He is a statutory auditor of many public sector bank, and also he is a director in many banks. So we can call him as Bhishmacharya of bank audit. He is the reason for success of many bank audit seminars conducted in Sicasa and SARC. With this, I hand over the proceedings to our chief guest, Mr. Naganathan sir.
Good morning. Thank you, Mr. Ramesh Naresh Gilli, and my friend Shivakumar, Mr. Ramesh, and other members of the SARC, and my dear students. It's a great pleasure for my part to inaugurate the seminar on the bank audit for the students. And really happy that I'm in a position to come and talk to you on this. And thanks for the introduction given by students there. Perhaps you know that this bank audit season is starts somewhere in the first week of March and ends somewhere in the end of May. I say the first week of March because many branches are conducting seminars for the benefit of the chartered accountants as well as the students how to carry on the bank audit. And this program is going on for years together, particularly when the Reserve Bank of India introduced prudential norms in the year 1992, and there onwards we have a series of seminars in every branch, and the bank audit seminar is the first seminar organized by the Institute of Chartered Accountants as well as the SARC in the month of either end of February or March. Yeah, a lot of things have been being discussed in this seminar, because a lot of changes have been made Reserve Bank of India on the prudential norms. Prudential norms, nothing but how certain guidelines issued by Reserve Bank of India in the identification account as a non-performing asset. Prior to that, what happened? Non-performing. There's no word non-performing asset. It is called a bad and doubtful debt at that time. Doubtful debt is one where, prior to the voice, somebody said yes, somebody said no. I distinctly remember when I was taking classes here for the students, one of those subjects which is no longer there in estate duty, several years before, because huge, large number of students, about 252, 270 students there, and asked them, student sitting the last row, can you hear me? Somebody said no. Then I asked him, how did you hear this? Well, suddenly power went off when I was talking about identification of doubtful assets prior to the introduction of the prudential norms. At that time, identification of a doubtful asset was in darkness only. There is no clear light. But later RBI introduced norms for the purpose of identification. From that time onwards, Reserve Bank of India have been issued circulars after circular. With the result, quite number of guidelines have been, guidelines have been issued to Reserve Bank of India, not only on the identification of the assets as non-performing assets, but as well as in the capital adequacy, and later on the long form audit report. And today's topics for discussion has been very, very, very interesting in the sense, first we talk about what is called LFAR, reporting of advances. I think one of the students will speak on that, how to prepare LFAR, how to collect the points for long form audit report, and how to make the LFAR is more interesting reading. Then session 2 is in respect of LFAR reporting other than advances. A lot of other items other than advances also carry a lot of weight as far as the LFAR preparation is concerned. So that seems to be the next session. Then third is prudential norms. Prudential norms which I have been discussing about. Quite a number of norms are there. Prudential norm does not relate to only advances. There are several other areas are there. Probably we are mainly relating to identification of the NPA as far as prudential norms is concerned, and chaired by my very good friend S. Ramesh. He is sitting in front of me, a well experienced chartered accountant, and I hope you will be richly benefited by that. The last one is use of information technology in bank audit. I think you student, you will be in a position to understand much better how the technology plays a very vital role as far as this audit is concerned, and more so in a bank audit. And particularly the last 1 year, the identification of NPA is what is called a system-driven NPAs. It is the parameters have been fixed by the IT department, information technology department. Each bank has got a department, and they fix the parameters based upon the user department, for example, a credit department or inspection department. With that, they fix the parameters, and the system identifies the NPA thoroughly. So you have a system identified NPAs, and what are the critical areas perhaps you would like to know about that is probably we have one of the best speakers, Vittalraj Chennai. He's spoken in many seminars on this. Name any seminar. Probably during this year also he would have spoken about at least 5 or 6 places, even more than that. Such an experienced person as far as the IT is concerned, and he will deliver a lecture on the use of information technology in bank audit. With the 4 interesting topics, I'm sure by the end of the day you will be richly benefited, and you will be definitely doing a very good job as far as the audit is concerned. And you, the students, are the future chartered accountant, as Naresh has rightly pointed out. And you will know now, you will know better, and you will use that, and you will be a brighter chartered accountant to carry out the bank audit in a much better way. With these words, I wish you all the luck, and thank you very much for the patience.
Thank you, sir. Now I request R. Shivkumar sir to speak a few words for us.
Yeah, my renowned teacher, Mr. Naganathan, Mr. Gelli, Mr. Ramesh, and others. When Mr. Gelli asked me that I should come over here as a chief guest today, I told him there's a better person than me, and it is none other than Mr. Naganathan. See, he has given a very short speech, but I accepted. I also accepted for the fact that I will sit on the dais because it's a privilege and pleasure to sit next to a teacher. Many of you will come to know about Mr. Naganathan a little later, but let me tell you that I am yet to come across one of the most committed teachers in this profession. A teacher above par, and don't simply think that he knows only about bank audit. He was a teacher in accounts. He has taught income tax, estate duty, auditing, professional conduct and ethics, and so on. And in the bank audit, he is one person who has never compromised, and an absolutely knowledgeable person and willing to help. That's why he is a teacher. I have seen many other chartered accountants who may not be willing to help each other, but here is one person who used to help the students. You call him at any time, and here is one person who is willingly will share the knowledge, at the same time willingly try to take the knowledge from you also. He was very, very focused on only on the subject part of it, but I am a different teacher. I am a very notorious teacher, in the sense that, I would expect you people to be focused on the subject from the practical side, and also please understand and notice that you have a subject of auditing in the final. And questions on non-performing assets always gets performed in the exams. You need to know about this. It's a very vast area. You need to get to know everything, and you have to read the subject. Now, we have been talking about the current generation of students. I'm very proud of the current generation, because you're all very well informed, and you also have various gadgets of information technology, including so-called cell phone, which is a disaster for you. Please note that you get to know more, you get informed about everything. At the same time, don't ever think that you will get to know the principle that right. When you go for an audit, you have to know the principles first. And bank audit is always wonderful. Let me also tell you this, because when I started as an apprentice way back in 1974, in the very first year we had a syndicate bank audit when I was in Rangaswamy company. When I'm noted for teaching very fast, but let me also tell you that I was also noted for working very fast, because our way of training was such that we calculated many things mentally, and we never used the calculators. We never had calculators for examinations at all. Therefore, our training was something totally different. I remember still, we tallied the syndicate bank balance sheet morning 3 o'clock. That was on July 10, 1975. 3 months of audit. The best part of bank audit, beyond getting to know about the nuances of the bank and other aspects of it, you also should know how to enjoy in going to other places of audit. In fact, when bank audit comes, my apprentices always say, sir, which branch you are going to get? So we pick up some branches outside the Chennai, and it's a pleasure to take the apprentices to be with them and see the other side of the story. 10 to 5 I am a teacher, but after that the students will take over me, and then they make all kinds of fun against us about the way the audit has been done. In fact, it was such a pleasure 2 years back when I took almost about 12 apprentices to do the audit. Believe it or not, morning we get up at 7 o'clock, enjoy 1 hour, 8 to 9 we tell the students this is what you are supposed to do for the day. Absolute documentation, absolute information, everything. And they are all beautifully computer savvy. And at the end of the day, we close the audit around 7 o'clock. You go for dinner. After coming back from dinner, we review the entire day and see the points. And mind you, I am very happy to say one of my apprentices, he was much more into computers, so he could repurpose the system. That is what I was telling Mr. Naganathan, that today's we need to know how the information is actually built in the system. Earlier it was absolutely manual, but today if you are able to get, and that is what the so-called core banking system that comes to you, you should get to know how the information is there in the system. And you should know how to retrieve the information for the purpose of your audit. That will come only by application of mind and a little bit of exposure. You should create some kind of a passion for doing the audit. And also let me tell you, don't just simply stop with the practicalities. And today's bank audit gives you more knowledge in terms of many things. In terms of accounting standards. In fact, the best ever standard or the worst ever standard I have faced was AS22 when I did Syndicate Bank. And still, both myself and Naganathan were always at loggerheads on this particular accounting standard. It was such a erroneous task for me. I have to share the experience with you. I spent 3 days with the management. Ultimately, and with the auditors, we never tallied each other. So it was 2002, if I remember back. The auditors were, the other part of the auditors qualified, and we simply kept quiet on the accounting standard. Even today, let me tell you, is one of the standards which is not much understood by many of us. And added to that, when you are going to the system today, please note that latest standards will play a very huge part, 31 and 32, before we talk about IFRS or other things. In fact, a standard which is not even understood by many of the chartered accountants. I am sure you will find it difficult, so you have to read it. And today, most of the banks, the most important area happens with the investments and derivatives transactions, which is very difficult to understand. So, friends, your opportunity is much better than what we had. You have to look ahead, you have to positively read, you have to continuously keep reading, understand, get confused, and get over it. Okay? And it's a good augury today, in spite of the so-called power going out. This is being inaugurated by a person who was regarded as a Bhishma Pitamaha. No doubt about it, he will continue to be Bhishma Pitamaha for all of us, and thank you very much.
Friends, before I request Lijal to give formal vote of thanks, I'd like to appreciate and thank Mr. Shivkumar for accepting a request, and also Sri Naganathan sir for coming here, and it's been a delight, sir. Friends, you'll understand, while Lijal was introducing, Naganathan sir has put in more number of years than me. I can forget about you. He's put almost 50 years of profession. I request all of you to give a thunderous applause for all his efforts in this profession. I request Srinivas to come and give a memento to Sri Naganathan sir. Thank you, sir. Thank you for coming and sharing your experiences. I'd like to give the memento to Sri Shivkumar sir. I now request Lijal to give a formal vote of thanks.
I'd like to thank our chief guest for the day and Naganathan sir for spending his valuable time here for us. And I would like to thank our special guest for the day, Shukumar sir, for spending his time here and sharing his knowledge, which came out from the vast experience they are having. Thank you, both of you, sir. I'd like to thank Naresh Chandrakalli sir for giving welcome speech. Thank you, sir. And we'll go to the seminar sessions. Thank you.
And now we'll move on to the session, first session. And I take the pleasure of inviting Mr. S. Ramesh, FCA, DISA, ICAI, and to tell about our speaker. He has graduated in economics from Vivekananda College, Chennai in 1978, and he did his articles under Sri P.V. Lakshmi Narayana and became an ACA in 1983. He started his practice in association with A. Bhaskaran in 1983 under the name and style of Bhaskaran and Ramesh Chartered Accountants, and he became an FCA in 1988, passed the Information System Audit exam conducted by the ICAI in September 2002, securing the All India 10th rank, and is impaneled as a peer reviewer in the peer review board of the ICAI. Has presented papers on the bank audit, accounting standards and peer review at several CPE seminars organized by SIRC and its branches. Has presented papers at seminars organized by Chambers of Commerce, and has also contributed articles in CA Journal and SIRC newsletter, and has co-authored a book on bank audit, guest lecturer for class 12 students in a very prestigious school in Chennai, and is a voluntary blood donor, A1 positive, and has donated blood more than 35 times in the last 10 years, and is actively involved with Vidyasagar and NGO in Chennai. And now I take this opportunity to invite sir to the dais. And I request the Vice Chairman of Sicasa, Mr. Mohit, to give the bouquet. And here comes the student speaker P.V. Anand. He did his schooling in Sedu Bhaskara, Ambattur, and he has cleared his IPCC in May 2010, and currently is doing his articles in Segaran and Venkatesh and Associates, Mylapore, and this is the first presentation by him, so we welcome him, and you can and now I hand over mic to Mr. Secretary Legit.
Good morning, my dear friends. This is P.V. Anand. I am doing my articleship in Sekaran Venkatesh, Mylapore. Now, we all know that bank audit is an ocean. I hope in this session, we will be having few glasses of water from it. How it is done in the case of advances. Then next we will be coming to LFAR. Then the category of advances for the purpose of LFAR, and finally to the format of LFAR. First of all, we must all know what are the types of audits. What are the types of audits? There are totally 5 types of audits. First one is the concurrent audit. Concurrent audit is the audit where an auditor can find major irregularities that is been occurring at a bank. So next comes the revenue or income audit. Revenue or income audit mainly focuses on the income, seekage of income, and it will be mainly focusing on the income of the bank. Next is the credit audit. Credit audit is the place where a particular loan account is being taken and the auditor scrutinizes the transactions that is taking place in the audit, and he will be reviewing that particular account. Next one is the stock audit. For obtaining any loan, it is generally required to give a security. It may be in the form of stock, or it may be some mortgage, some property being mortgaged. So a stock audit is being conducted. The auditor goes to the place of the client and he will be verifying if the stock are being properly maintained and whether the stock statement which are necessary to be submitted to the bank is submitted in time. Next is the statutory audit. Statutory audit is the focus of this session. LFAR stands for long form audit report. The RBI thought that the reporting in statutory report was not sufficient because it felt that it was in a short form. So it needed detailed explanation on each and every item. So this led to the introduction of LFAR in the year 1992-93. It is a detailed questionnaire prepared by RBI, and the latest format which is in use now is from 31/3/2003. So it acts as a checklist for the auditor. Generally, before starting a statutory audit, the auditor can view through the LFAR and he can collect the points which he needs to look into. So this is a perfect audit tool, and it also acts as a planning tool for the auditor. Based on the LFAR, the auditor can categorize the work to be done during the statutory audit process. He can know how much time to be allotted for each audit process and how to delegate the work to his audit team members. Since the statutory audit report and the LFAR are two separate and distinct reports, there must be no reference in the main statutory audit report making any reference to the LFAR. So the LFAR must be wherever there are irregularities being mentioned in the main statutory audit report, there will be a detailed explanation available in the LFAR, whereas everything mentioned in the LFAR need not necessarily be in the statutory audit report. Any report of qualificated nature or any remark of qualificated nature must necessarily form part of the main audit report. Now let's move on to the questionnaire. As I rightly said, it is a detailed questionnaire. There are various questions being laid out on the following areas. First will be on assets, next on the liabilities, next in the P&L, then general items and all. This session will be focusing on what are the questionnaires in advances and how the audit of advance needs to be done. So while starting the audit of advance, first we must look into few items. We have to know how the advance is being sanctioned, and we need to know how the liability gets devolved. In case of non-fund based advances like the bank guarantee or the letter of credit, there needs to be proper documents being maintained. Then if a loan is being advanced to a particular sector, it is been advanced to a very particular set of people. For example, there is overexposure to a particular party, it needs to be noted. Then the document needs to be maintained genuinely. First of all, before starting an audit, generally we need to know about the branch. We must collect the information regarding how the powers are being delegated to various authorities, and we must know how the bank process is being held. Next, we must review the reports which are being submitted by various competent authorities. There are concurrent auditors who submit the concurrent audit reports. There are many irregularities being mentioned in the reports, and we need to review what are all those and whether action has been taken by the branch regarding it. Everything needs to be reviewed. Finally, we need to know about what are the advances, what are the list of borrowers, who are the large borrowers, and any probable NPAs are there, and how the NPA recovery process is being carried out. LFAR in the category of advances for the purpose of LFAR are two. One is the large advances, the next one is these other advances. Large advances for the purpose of LFAR means the advances which is outstanding to the amount of 5% of total advances of the branch, or 2 crores, whichever is less. Hence, an advance to be a large advance, it can be of maximum 2 crores. While reviewing the large advance, an auditor has to take extra care and see the items thoroughly, and he must report on every deficiency observed in the audit. In case of other advances, he need not necessarily go into each and every aspect of it, but he can check on test basis and report wherever necessary, and he must also give the circumstances which has led him to make such adverse remark. The format of LFAR. The format of LFAR is so simple that it is nothing but the stages of advances and what are the items to be looked into the advances and how the irregularities, what are the possible irregularities, and if the irregularities are there, how it needs to be reported to the bank management. Application stage. Anyway, before when a loan is being availed, first it has to be applied. The application must be in the prescribed form. Next, the KYC norms needs to be complied. Know your customer norms. For this purpose, the bank has to know about the customer. What are the details required to know about a customer? First of all, it needs to know who is the customer, where is he residing, whether the address mentioned in the application form is proper or not, or where is he getting employed, and whether he is drawing proper salary, which will be required to know that he will be repaying the loan, etc. Then you must know, if in case of a company, a board resolution is required, so which needs to be obtained. If it is not there, we must make a note in the LFAR. Various registration, licenses, permits and all needs to be obtained, which if it has not been obtained, it needs to be reported in the LFAR. A due diligence report by an auditor needs to be obtained to see that the auditor generally it is being carried out by an audit department, which gives a certificate based on the audit, based on the verification it has done through the know your customer norms. Next one is the credit appraisal stage. Credit appraisal stage is very important, as this is the stage where the amount of loan is being determined. First of all, the bank has to see if an auditor has to see if the bank has properly followed the appraisal system as laid by the head of the department, and it has to see if the appraisal note is being maintained at the branch level, and if so maintained, it must be properly maintained. Then a bank requires to collect the details of projection from the customer. So the purpose of it is to know how the business of the customer will be in the next 2-3 financial years. Based on this, loan is being advanced. So the auditor has to look into the projections submitted by the borrower, and he has to review the sources of funds for repayment. He must also conduct analysis on the credit worthiness of the borrower and also the guarantor. In case a person comes to a bank and applies for a loan, the bank cannot just like that give a loan. It needs to know who is the customer, whether he is having any existing loan with other bankers or not. For this, a bank has to obtain a no objection certificate from the existing banker. In case the confidential letter submitted by the existing banker is adverse, or it says something irregular about that borrower, the bank has to be very careful before lending a loan. So in case this is not been complied with, the auditor has to make a report in the LFAR. The document which determines the status of the borrower, for example, the partnership deed in the case of a partnership firm, or the memorandum and articles of association in the case of a company, needs to be submitted. The credit bureau report is also available, with which we can find whether the borrower is having any loan with any banker, is any legal case is pending against him. All these reports needs to be reviewed by an auditor. The exposure limit which is fixed for the loan must be as per the loan policy, and it must be as per the industry wise policy which has been fixed by the bank. The security cover must be adequate. The security must be adequate, at the same time it must be executable also. Here I would like to point out an example. This was the experience which my auditor had during one of his audits to a statutory of a bank. Once he had an argument with the bank manager whether the security for a particular loan was adequate or whether it was enforceable or not. The situation was that a borrower had applied a loan for 2-3 crores. The security which was offered was a school. So it is definitely an adequate security, but there comes a question whether it can be executed or not. In case the borrower becomes irregular and he is not repaying the loan properly, then the bank, if it decides to take the control of the school, it is not possible, because if this becomes a case in court, the High Court decision may also be in favor of the borrower, as the students' point of view needs to be seen, because the students may also feel that the school should not be closed down and their education will be disturbed due to this. So whether if the security is available and adequate, it must also be enforceable. Next, financial ratios. Key financial ratios like the debt to equity ratio, the debt service coverage ratio, the current ratio, etc. must be at the satisfactory level. If it is not so, a report has to be made in the LFAR. In the case of major advances, a bank has to conduct a credit rating analysis. If this is not being done, it must be reported in the LFAR. Techno-economic feasibility report refers to the technological and economic feasibility of that borrower. It needs to be complied with. Sanctioning and disbursement. Sanctioning and disbursement, this is also an area where the auditor has to be very keen and has to make report of any irregularities being observed, because as the sanctioning must be within the authority which is being fixed by the bank. In case if it is not within that authority, it must be ratified by the appropriate authority within the specified period. In case it is not being done so, an auditor has to report in LFAR. Whether in a case the concerned authority may be contacted through phone and a confirmation may be obtained from them. Later on, a documentation has been made for this. It must be routed only through a proper authorization channel as prescribed by the head office. The loan sanction must be within the discretionary power of the sanctioning authority. In case it goes beyond the goes beyond the discretionary power of the sanctioning authority, it must be ratified by him within specified period. In case there is some change in terms of sanction, it must also be ratified within specified period. Before advancing a loan, a bank has to conduct pre-disbursement scrutiny, which is done at the unit level, and the bank has to have a report on it. In case such inspection is not being carried out, it is a point to be noted in LFAR. If there is an ad hoc limit being sanctioned, it must be liquidated in time and it must also be reported to the concerned authority. A bank has to obtain an acceptance letter from the borrower. This is required because only then it is a proof for the bank that the borrower has accepted to the terms and conditions of the loan. There must also be the terms and there must also be a credit letter or a disbursement statement which states the various conditions of that loan. Investment of promoter stakes must also be known before the investment. If an account is being sanctioned and the hypothecation letter and the hypothecation is being created on some other day, for example, a loan is being disbursed on 10th November and the hypothecation is created on 13th November, it means that the bank was put into insecurity for 3 days. This must not happen, and this must, if this has occurred, it must be reported in the LFAR. Documentation must be as per the instructions of the head office. The various documents like the demand promissory note, the guarantee letter or the hypothecation letter, etc. must be as per the instructions, as per the norms and conditions specified in the sanction letter. In case there is a legal opinion needed on a specific loan, it must be obtained and it must be kept in record. Appropriate stamps must be affixed in the various various documents. In case there is some change in the terms of conditions, or if there is a renewal of a loan, fresh documents needs to be obtained. The ROC forms also needs to be verified in the case of a company. An auditor has to see if Form 8 and Form 13 has been filed with the ROC, and if the charges has been created and it is in the favor of the bank. In the case of third party borrowing against the branch fixed deposit, normal lending rate must be charged in the place of the concessional rate which is being charged for others. All the documents such as the title deeds, share certificates, the original agreements, etc. must be in safe custody with the bank. It must be seen that it is being maintained in safe custody. If it is not so, it must be reported in LFAR. There must also be a no objection certificate being obtained from the housing society. Constitution proof of the borrower, as I said to you earlier, is required to be in record with the bank. Marking of lien on advances is also a very essential area, because the branch has to mark a lien on the advances which has been given as a security for various deposits. The deposit, only then the bank will be knowing that if this deposit gets closed before if the deposit gets closed when the loan is in pendency, it is an advance command to be reported in LFAR. Consortium finance is an agreement where 2 or 3 banks combine together and advance a loan to a particular borrower. In this case, there are few additional documentation requirements which needs to be done by the branch. They are: the bank has to maintain the updated minutes of the meeting of the consortium bankers, and also consortium bankers, in case of consortium finance, there must be a joint documentation being maintained. The inspection of the unit must also be conducted. The lead bank must confirm that it is having the possession of valid documents, and it must also say if the drawing power has been regularly calculated. Review and monitoring is the final stage of the loan. After loan is being disbursed, how is the performance of the loan? It needs to be seen, and what are the areas to be looked into? Let's see. Regular submission of book debt statements. Book debt statement needs to be submitted regularly. In case it has been submitted, it must be certified by an chartered accountant once in 3 months. In the case of obsolete or damaged stock, the drawing power needs to be reduced accordingly. In the case of letter of credit, if a stock has been given as a security, if a stock has been given as a security, it must be seen that that stock has been separately mentioned in the stock statement, or else it results in double financing also. In case of a parking credit facility being given to a borrower, it must be seen that separate stock statements are being submitted, and also the liquidation is through export proceeds only. In case this is not through export proceeds, the bank has to charge the normal lending rate in place of the concessional lending rate. The exchange rate translation which is being carried out at the bank must be verified by the auditor, and it must be seen that it is within the exposure limit fixed. As I said earlier, when we submit the projected statement at the stage of credit appraisal, the same statement now needs to be seen if the projected and the actual figures are matching with. If there is some large differences, it is a point to be noted in LFAR. In case if a stock is being maintained at the rented godown, it needs to be seen that a no lien certificate is being obtained from the owner of the godown or the tenant, owner of the godown or the landlord. Acknowledgement of debt needs to be obtained from the borrower that he is complying with the requirement of the bank. Stock statement and book debt statements are to be submitted regularly. In case this is being delayedly submitted, there must be a penal interest being laid on the borrower. The borrower has to utilize the sanction limit which is being given to him. In case it is not been done so, commitment charges needs to be levied on him. In case of non-corporate borrower who has a limit of 25 lakhs or more, it is a requirement that the audited financial statement should be submitted by him. The audited statement must not be a qualified report must not be submitted along with it. It must be seen that the report is clean and no vague comments are being reported in it. In the case of other borrowers, it must be seen that where the limit sanction is beyond 5 crores, a stock audit needs to be done. Then the classification of advances done by the bank needs to be seen if it is in line with the norms prescribed by RBI. Classification of advances. Advances can be classified into standard, substandard, doubtful, and loss. Standard advances are those which are performing and there is a regular repayment of loan and interest recovery is being done properly. Where the interest recovery is not being made or it is not possible in a particular borrower, then it becomes an NPA after 3 months. If an advance remains in NPA for 12 months or more, it becomes a substandard asset. After being a substandard asset for 12 months or more, it becomes a doubtful asset. If it needs to be written off, it is a loss asset. The security which we have collected needs to be reviewed regularly, and it must also be seen that where the bank has given loan having the shares as a security, it must be seen that it is not against a partly paid up share or the shares of the bank itself. It must also be seen that the stocks have been properly maintained at the bank. In the case where the RBI has done an assessment, an auditor has to take into account the assessment done by the RBI, where the RBI sends the regional office of the RBI sends a list of advances where there is a huge differences between the provisioning made by the banker and the provision made by the RBI. This needs to be noted down. So in case of a loan is pending renewal or review, it must be noted, and it must be an analysis of it must be done in the way that an analysis has to be done to see that how the review needs to be done within 6 months, and how it needs to be done from 6 months to 1 year and more than 1 year. NPAs which are in the bank needs to be reported to the controlling authority. It must be seen that the proper recovery process is being done by the bank as required by the head office. The end use of funds needs to be scrutinized. The purpose of loan may be one thing, and the actual use of loan may be one thing. It must not happen in the case of a loan sanctioned by bank. So it must be seen that for the purpose being availed, it must be used. A proper review of the account needs to be conducted. It must be seen how the cash monitoring is being done and how the funds are being utilized. Where a bank has given a loan and the shares and the stocks are being pledged to bank, the bank signboard needs to be needs to be displayed in the premises of the stock. Next comes the drawing power calculation. Drawing power calculation is made based on the stock and book statement. It is based on the latest stock or book statement submitted by the borrower. A stock statement or a book statement which is submitted which is 3 months older should not be considered for this DP calculation, and it must be reported as irregular. The guidelines of RBI needs to be followed in the case of unpaid stocks. Inventory and equity valuation also needs to be verified by the auditor. It must be seen that the audited financial statement submitted by the borrower matches with that of the calculation. Drawing power calculation is made based on the stock and book statement. It is based on the latest stock or book statement submitted by the borrower. A stock statement or a book statement which is submitted which is 3 months older should not be considered for this DP calculation, and it must be reported as irregular. The guidelines of RBI needs to be followed in the case of unpaid stocks. Inventory and equity valuation also needs to be verified by the auditor. It must be seen that the audited financial statement submitted by the borrower matches with that of the monthly stock statement submitted by him at the year end. Restructured advances. Advances will be restructured. After it becoming restructured, it can be either a standard advance or a substandard advance or a doubtful advance. An advance cannot be further downgraded through restructuring. Restructuring cannot be done retrospectively also. Fraudulent customers are not eligible for restructuring. In the case where the restructuring is being done, in the case where the advances are proper and everything is being recurring properly, it must be seen that the advance is not downgraded. The condition to be satisfied are whether the unit is viable, becomes viable in 7 years, and in the case of infrastructure it is 10 years. When whether the loan is repayable within 10 years and 15 years in the case of infrastructure, and the security is adequate for that loan, and it must be seen that in the case an additional funding is being brought in, or the promoter sacrifice is 15% of the sacrifice made by the bank. Other than capital market lending is not eligible for restructuring advance. If a customer is fraud, restructuring should not be done in such advances. Where intangible securities are being offered for a loan. For example, the rights or patents etc. are being offered as a security. It is not a tangible security, so it must be grouped as an unsecured loan, unsecured advance. It is a duty of the auditor to remember that the reports are being discussed with the bank authorities, and wherever the management letter is being necessary, it must be obtained from them. It must be seen that the report is being sent to the central statutory auditor for consolidation. The LFAR must be very specific and there must be no vague comments being mentioned in the LFIR. Thank you. I take this opportunity to thank Sicasa for giving me this opportunity to share my views on this topic. I would like to thank Mr. Sundarajan sir who helped us in making this presentation. I would also like to thank my auditors who helped me and motivated me in presenting this seminar. Thank you, one and all.